2290 is a precise long-term level easily identified as a barrier to the long-term recovery, since it has the classic characteristics of role reversal to go from support to resistance. It demonstrates how a significant level doesn't have to originate from a chart pattern, but can have a significant influence on potential chart patterns. The overall formation was an ascending triangle. Similar to other examples, it has some variation and two main outlines, depending on how the uptrend line is plotted. The already important 2290 level, along with the gap fill and upper resistance boundary of the ascending triangle, form a large range of support, as the chart firmly maintains the larger uptrend. It is not too surprising a slight incline emerges to continue higher, following the two prior consecutive gap-ups that were not filled. As usual, this is an element of an aggressive uptrend, and strong foundation for a bullish continuation as seen with the new upswing starting December. A larger correction like the current downtrend does not happen earlier because of the gap up fill in March, and the wider lower 30s range that still offers significant support potential. It is a good idea to adjust the downtrend line after it was temporarily surpassed, but selling volume remains constant for a stable drop lower into the key long-term support range. Sustainable increases in bearish volume lead to a clean break and reveal a larger head and shoulders reversal that even has a smaller internal head and shoulders outline form the head. After overcoming the old 30 to 31 range that became a large neckline area, there were plenty of precise gaps and swing points, close to the 32 to 36 range derived from the large head and shoulders. As the head and shoulders range transitioned into a long-term support boundary, a new range in the low 40s formed to have similar precision where many clean swing points and gaps formed. 4380 is such a strong support, it ends up demonstrating a case where a gap up is not filled due to a firm prior level above the gap fill. This forms a clean triple bottom in the short term and a horizontal resting phase range in a normal bullish continuation. 4660 becomes another instance where a single price level becomes the site of several clear gaps and swing points in a relatively short period, to develop into a clear long-term boundary fairly quickly. A gap down accelerates a less strict triple top by the catalyst event of an earnings report. This is such a strong bearish event, it is able to breach 4660, which never ends up becoming the site of major long-term reversals in the following years. This is due to similar rapid fluctuations in price, both bullish and bearish. However, it and the 5275 level are still the site of prolonged periods of contentious trading, which is a secondary feature of a significant price level.